Welcome back to our monthly real estate market update at Pries Capital Real Estate. I'm Jason Pries, the founder of Pries Capital Investment Research. As of January 12, 2025, the Myrtle Beach single-family real estate market continues to cool, with home prices plateauing over the past few months. While the Real Estate Market Action Index has consistently declined, the market remains loosely in the seller's zone. The New Year's week brought the expected seasonal slowdown, with new listings and sales taking a dip. However, we anticipate these numbers will start to rebound in the coming week as the holiday dust settles. This year, the Christmas and New Year's holidays fell on Wednesdays, disrupting 2 full weeks of activity for home sales and data tracking. Adding to the challenge, mortgage rates climbed back above 7%, putting added pressure on buyers. Looking at the numbers, the 4 December weeks in 2024 saw an average of 65 new pending sales per week for single-family homes, virtually unchanged from the average of 64 in 2023. While that may seem flat, it's worth noting that recent headlines have reported growth in sales. When December's data is published by traditional sources, they'll likely highlight year-over-year sales gains. However, those figures are based on closings, which lag behind real-time market activity by 30 to 45 days. What we're focused on is what's happening now, how homebuyers are responding to 7% mortgage rates, and what early signals are telling us about the market's direction. At Pries Capital Investment Research, we meticulously track every home for sale across Myrtle Beach each week, monitoring pricing, supply and demand, and all changes in the data, to provide you with real-time insights. Now let's dive into the details of the Myrtle Beach real estate market as we begin January 2025. As of this week, there are 919 single-family homes unsold on the market, a 26.2% increase compared to just a year ago. It's typical for inventory to fall sharply over the holidays, but the second week of January usually brings a slight inventory boost, as we've seen this week. I expect another increase next week, followed by a seasonal dip later in the month. In most years, new listings are slow early in the year, with inventory typically reaching its lowest point in early February before starting to climb for spring. During the pandemic, when demand was at its peak, inventory didn't hit its low point until March or April because there were far more buyers than sellers. That dynamic isn't in play now, so we can expect inventory to begin building earlier this year, likely starting in February 2025. With current inventory trends of 26% more homes on the market now compared to this time last year and mortgage rates staying above 7%, we can expect a dampening effect on purchase demand. If inventory starts building consistently in January, earlier than usual, it could be an important signal about what to expect for the rest of the year. To put things into perspective, the total number of unsold homes on the market as we start 2025 is just 23% fewer than in 2019. A stark contrast to the ultra-tight inventory levels we've seen in recent years. Here are a few key takeaways looking at 6 years of inventory trends. Low mortgage rates, low inventory. When mortgage rates were low and falling, inventory followed suit. Buyers took advantage of cheap money to purchase and hold real estate. Rising mortgage rates, rising inventory. In years like 2018 or the last 3 years, when rates were high or climbing, inventory grew as fewer buyers entered the market. This trend tells us that with mortgage rates likely to stay elevated through 2025, inventory will continue to rise, potentially returning to pre-pandemic levels later this year. In fact, many southern markets already have more inventory than they did in 2019 or 2018. Northern markets, while still constrained, are also starting to show signs of growth. The real question is how quickly inventory will build and how this will influence the broader market. As we track these changes week by week, we'll gain clearer insights into how 2025 will shape up for buyers, sellers, and real estate professionals alike. The holidays are always a slow time for new listings, and this year is no exception. While we'll see a slight bounce in next week's immediate new listings data, this is a great time to take a closer look at a different perspective on seller volume, one we haven't reviewed in a while. This week only 57 newly listed single-family homes were added to the market. The New Year's holiday landing on a Wednesday disrupted the week's activity, making it a tough period for new listings. However, when we talk about new listings, it's important to break them into 2 groups. Immediate new inventory listings. These are newly listed homes that hit the market this week but remain in active inventory, awaiting offers. And immediate sales. These are newly listed homes that sell almost instantly, within a couple of days of listing, and go straight into contract without spending much time in active inventory. We started tracking immediate sales during the pandemic, a time when the market was dominated by intense buyer competition, bidding wars, and multiple offers. Back then, immediate sales were a defining feature of the market, but that frenzy has largely subsided. Now immediate sales are much less common, signaling a significant cooling in demand. This week we counted just 74 immediate sales, which is remarkably low. Looking at the chart, Each bar represents a week of new listings. The gold portion of each bar highlights the immediate sales. You can see how the volume of immediate sales has been shrinking steadily throughout 2024 as the market cooled. While total new immediate listings in 2024 were similar to last year, I expect 2025 to bring modest growth in seller volume. However, we won't return to the extreme levels of 2021 or 2022, where some weeks saw close to 100 new listings count. Those days of pandemic-fueled activity are behind us. That said, we should continue to see a gradual increase in listings. Currently, about 13% of newly listed homes sell immediately, compared to 35% during the pandemic when 1 in 3 homes sold almost as soon as it hit the market. That level of competition was unprecedented and unsustainable. Now we're seeing a healthier balance, with about 1 in 10 homes categorized as super hot listings that attract immediate offers. Every market has these rare gems, homes in desirable neighborhoods that savvy buyers are ready to pounce on, but the days of rampant buyer competition are over. So that's the supply side of the story. Next, let's shift gears and take a closer look at the demand side of the market. This is the point where we're closely monitoring whether the sales trend is beginning to shift. Currently, 445 single-family existing homes are under contract, about 18% fewer than this time last year. While any sales growth in 2024 would have been a welcome change, the total number of pending home sales remains lower than where we started 2022 at the tail end of the pandemic. That said, some small signs of growth are emerging. As I mentioned earlier, the holiday weeks are tricky for precise measurement due to the noise in the data. If we isolate newly pending sales for December, we see no growth compared to last year. The chart here shows total homes in contract, and you can see that this week and next will likely represent the low point for the year. Looking ahead, home sales typically begin climbing in January, and this year is no different. The number of homes in contract is already up by 3% compared to last week. However, it's worth noting that weekly sales numbers have been flat for several weeks, so these gains are precarious and could quickly revert to 0% growth. Two factors are driving this uncertainty. Holidays falling midweek, the placement of Christmas and New Year's on Wednesdays disrupted activity and muddled the data. Mortgage rate spikes. With rates surging past 7%, many potential buyers are opting to delay purchases, waiting to see if rates decline. In December, sales momentum clearly faded. While it's challenging to pinpoint whether this is due to the holiday timing or the impact of high mortgage rates, it's clear that buyers are highly sensitive to the cost of borrowing. Starting next week, as we keep moving away from the holiday period, we'll gain clearer signals about how much mortgage rates are influencing buyer activity. At Pries Capital Real Estate, we initially forecasted 5% home sales growth for 2025. However, the recent data suggests the current trajectory is falling short of that projection. While it's still early, this is a trend we'll be watching closely through February, especially as persistently high mortgage rates continue to weigh on buyer demand. On to home prices. Myrtle Beach home prices remained remarkably resilient throughout 2024, even as the unsold supply of homes grew. By the end of the year, home prices were up about 1.4% compared to 2023. Right now, the median list price for single-family homes in the market is just under $449,900. See the far right side of the chart, while the median pending price, the price of homes going into contract, is around $428,000. The 2025 line is starting slightly above last year, showing only a 2% increase over the same week in 2024. It's important to keep in mind that this reflects the Myrtle Beach market specifically. Other regions have seen more dramatic shifts. For example, some markets in the Northeast experienced 10% home price increases in 2024, driven by extremely tight inventory. A colleague shared how their suburban Chicago investment property, which had barely appreciated in a decade, saw significant gains last year due to inventory scarcity. This highlights a crucial point: using hot markets like Austin, Texas, or Sarasota, Florida, as benchmarks for price trends may not accurately reflect national or regional patterns. Myrtle Beach has its own dynamics, and we expect 2025 trends to mirror 2024's, but with less pronounced price movements. In this view, we're tracking both median list prices and median pending prices week by week. To reduce noise, we've used a 3-month delta for a smoother trendline. Here's what to watch in the weeks ahead. After the new year, prime inventory typically enters the market. This marks the reset of real estate seasonality, with home prices peaking around June. Mortgage rates play a critical role in price trends. You can see the impact of the first major rate spikes in June and October 2022. With rates now holding steady above 7%, we'll be watching closely for their effect on home prices in the first quarter of 2025. The key takeaway here is that Myrtle Beach home prices are likely to continue rising modestly, but at a slower pace compared to 2024. The extent of that growth will depend heavily on how buyers respond to these persistently high mortgage rates as the market resets in the coming months. Let's wrap up today by looking at days on market for homes in Myrtle Beach. Days on market is a critical gauge of demand, and it's also tied to the immediate sales metric I mentioned earlier. Right now, homes are staying on the market for an average of 113 days, about 4% longer than this time last year. For comparison, during the pandemic frenzy, that days on market number dropped to around 80 days. This metric adjusts slowly because in slower markets, homes can sit unsold for months. However, we'll see shifts in the coming months as the seasonal market cycle kicks in. March is when we typically see the freshest inventory, with the most new listings and the strongest buyer demand. At this point, the average days on market begins to decline for the season. Buyer demand tends to peak at the end of June, after which the time on market typically starts climbing again as activity slows later in the summer. At Pries Capital, we calculate the total days on market for a listing. This means that if a home doesn't receive offers, gets pulled during the holidays, and is then relisted in the spring, we count the entire period in our data. This provides a more comprehensive view of how long homes are actually taking to sell. Right now there's a slight uptick in sellers withdrawing listings, often to test the market. While withdrawals aren't at extreme levels, they are slightly elevated, meaning we can expect some of these homes to reappear in the spring, potentially driving the days on market higher. And that's all the data we have time for today. If you're looking to make sense of this ever-changing real estate market, we're here to help. Call us or visit our prestigious office at Pries Capital in Myrtle Beach, South Carolina, where we'll guide you through everything you need to know about the housing market. You can also visit our website at priescapitalrealestate.com, where you can now sign up for a free Pries Capital Real Estate Research account. With this account, you'll gain access to weekly local market data. And again, I can't stress enough that this live data comes out weekly with insights tailored to your area. Whether you're buying, selling, or advising, we'll help you dive into your local market and make informed decisions. Click the link below to get started. Thanks for tuning in, and we'll see you next time.